Most traders spend years searching for an edge they believe exists somewhere outside themselves. They study indicators, backtest strategies, analyze sessions, and consume endless content, all with the quiet assumption that profitability is a technical problem waiting to be solved. Yet when you observe Japanese traders who have survived for decades, something becomes immediately clear. Their daily routine looks nothing like what most retail traders imagine. There is no rush, no constant chart hopping, no obsession with catching every move, no emotional spikes tied to wins or losses. What they do daily is subtle, disciplined, and often invisible, which is exactly why most traders ignore it. The misunderstanding begins with how trading is framed in the West. Trading is often presented as a performance activity, where success is measured by speed, aggression, and short-term results. Japanese trading culture evolved differently. It emerged from a broader cultural relationship with process, repetition, and mastery. Profit was never the primary daily objective. Stability was. This distinction changes everything. Japanese traders do not wake up asking how much money they can make today. They ask how well they can execute today. That single shift removes pressure before the market even opens. Where most traders begin their day mentally indebted to profits they haven't earned yet, Japanese traders begin neutral. Neutrality is power in probabilistic environments. A typical Japanese trader's day often starts long before charts are opened. There is a deliberate mental check-in, not to generate motivation, but to assess emotional condition. Fatigue, agitation, excitement, distraction, these are noted without judgment. If the internal state is unstable, trading size is adjusted or trading is skipped entirely. This is not seen as weakness. It is seen as professionalism. Most traders ignore this because they believe discipline means pushing through emotions. Japanese traders understand that discipline means respecting them. When charts are opened, they are not flooded with indicators. The focus is on structure, context, and rhythm. Price is observed as behavior, not as opportunity. Where many traders look at charts with desire, wanting price to do something, Japanese traders look with acceptance. They are not trying to predict. They are trying to understand. Understanding precedes participation. One of the most ignored daily habits is deliberate non-action. Japanese traders often spend more time watching than trading. This is not because they lack setups, but because they respect timing. They wait for alignment, not excitement. To the average trader, this looks like hesitation. To the experienced trader, it is patience refined through repetition. Western traders are taught to be decisive. Japanese traders are taught to be precise. Precision requires waiting. Another daily practice that most traders ignore is review without emotion. Trades are logged, not to justify outcomes, but to identify behavioral patterns. The question is rarely, was this trade profitable? The question is, was this trade necessary? Over time, unnecessary trades disappear. Profitability emerges not from more action, but from less. This reduction is uncomfortable for many traders. Activity feels productive. Stillness feels risky. Japanese traders learn early that unnecessary action creates noise, and noise destroys clarity. Clarity is cultivated daily, not occasionally. Risk management is also approached differently. Instead of calculating how much they can gain, Japanese traders calculate how much disruption they can tolerate. Losses are framed as costs of participation, not failures. Because of this, they are emotionally prepared for them before they occur. When a loss happens, it doesn't shock the system. It was already accepted. Most traders ignore this acceptance phase. They intellectually acknowledge losses are possible, but emotionally experience them as violations. Japanese traders close that gap through ritualized preparation. Another overlooked habit is consistency of routine regardless of market conditions. Whether markets are volatile or quiet, the routine remains largely unchanged. Same preparation, same observation, same execution standards. This stability reduces emotional variance. Traders are not thrown off by changing conditions because their internal process is fixed. Western traders often adapt too much. They change strategies, rules, and risk in response to recent outcomes. Japanese traders change slowly and deliberately. Adaptation is intentional, not reactive. There is also a cultural emphasis on humility toward the market. Japanese traders do not attempt to dominate price. They align with it. Losses are not taken personally. Wins are not celebrated excessively. Emotional extremes are avoided not because emotions are bad, but because extremes distort judgment. This emotional moderation is trained daily. Silence is another overlooked component. Many Japanese traders work in environments that minimize noise. No constant news feeds, no social media commentary, no signal groups. External opinions are treated as contamination. The trader's relationship is with the market and with themselves. Most traders ignore this because noise feels comforting. It creates a sense of belonging, but it also creates dependency. Japanese traders value independence over reassurance. As the day progresses, trades are taken only when conditions meet predefined criteria. There is no improvisation driven by boredom. When nothing aligns, nothing is done. This restraint compounds over time. Fewer trades mean fewer mistakes. Fewer mistakes mean faster learning. At the end of the day, the routine does not end with P&L. It ends with reflection. What was felt, what was noticed, what was resisted, what was avoided. The emotional record is as important as the financial one. This daily loop reinforces self-awareness. Self-awareness reinforces discipline. Discipline reinforces consistency. Most traders ignore this because it feels slow, but slowness is deceptive. It creates longevity. The Japanese trader's edge is not hidden in a strategy. It is hidden in repetition without drama, in discipline without force, in acceptance without resignation. By the time profitability appears, it feels anticlimactic. There is no breakthrough moment, no sudden realization, just the quiet accumulation of correct decisions. As the routine continues day after day, Japanese traders begin to develop an internal rhythm that is difficult to explain to those who haven't experienced it. It's not about timing entries perfectly or predicting price movements. It's about synchronizing their internal state with the market's pace. This synchronization is subtle, but it fundamentally alters how decisions are made. One of the most ignored daily practices is emotional normalization. Japanese traders do not attempt to eliminate fear, hesitation, or doubt. They expect these emotions to appear. By expecting them, they remove their power. When fear arises, it is acknowledged without reaction. When excitement appears, it is noted and softened. Emotional neutrality is not forced. It is cultivated through repeated exposure. Most traders ignore this because they believe emotions should disappear with experience. They don't. What changes is the trader's response to them. Another overlooked habit is the deliberate slowing down of decision-making. Japanese traders often pause before execution, even when a setup is valid. This pause is not hesitation. It is a final alignment check, not of indicators, but of internal readiness. Is the mind clear? Is the impulse calm? Is there urgency creeping in? If the answer is no, the trade is skipped. Skipping valid trades is something most traders cannot tolerate. They fear missed opportunity more than bad execution. Japanese traders fear misalignment more than missing out. This mindset dramatically reduces overtrading. Trades are fewer, but cleaner. Losses are smaller, but more acceptable. Over time, this restraint compounds. Daily chart review is also approached differently. Instead of scanning for opportunities, Japanese traders scan for behavior. How did price move? Where did it hesitate? Where did it accelerate? This observation trains intuition without forcing prediction. The trader becomes familiar with market personality rather than individual setups. Most traders rush this process. They want conclusions. Japanese traders value exposure over conclusions. Risk is also framed differently. Rather than asking how much they are willing to lose on a trade, Japanese traders ask how much emotional disruption the trade might cause. If the potential loss feels destabilizing, the trade is reduced or avoided. This protects mental capital, an asset most traders only realize exists after it's depleted. Mental capital is replenished through consistency, not success. Another daily habit that goes unnoticed is the respect for routine regardless of outcome. After a winning day, the routine does not change. After a losing day, the routine does not change. This constancy stabilizes identity. The trader is not defined by recent results. They are defined by their process. Most traders adjust behavior based on how they feel. Japanese traders adjust behavior based on predefined structure. There is also a deep respect for rest. Trading days are not extended unnecessarily. Screens are closed at predetermined times. Overexposure is avoided. Fatigue is recognized as a risk factor, not a badge of dedication. Many traders believe more screen time equals more opportunity. Japanese traders understand that more screen time often equals more mistakes. Reflection is another daily ritual that most traders rush or skip entirely. Japanese traders review not just what they did, but why they felt compelled to do it. Impulses are traced back to emotional triggers. Patterns emerge over time. Awareness deepens. This reflective practice builds self-trust. The trader learns they can observe impulses without acting on them. This skill transfers directly into live execution. Another critical but ignored habit is acceptance of slow progress. Japanese traders do not expect linear improvement. They expect oscillation. They expect setbacks. This expectation prevents discouragement. When progress stalls, it is not interpreted as failure. It is interpreted as integration. Most traders quit during integration phases because nothing appears to be happening. Japanese traders also limit external input deliberately. Opinions, predictions, and commentary are minimized. The trader's focus remains internal and contextual. This independence reduces confusion and builds confidence rooted in experience rather than reassurance. As the day ends, closure is intentional. Charts are closed. Notes are written. Mental residue is cleared. Trading does not bleed into the rest of life. This boundary preserves emotional energy and prevents burnout. This is perhaps one of the most important differences. Trading is treated as a practice, not a lifestyle identity. The trader is not constantly on. Balance is preserved. Over time, these daily habits reshape how the trader experiences uncertainty. What once felt threatening becomes familiar. Familiarity breeds calm. Calm allows clarity. Clarity improves execution. Profitability emerges as a byproduct, not a goal. As these daily practices compound, something subtle but profound happens. The trader's relationship with the market shifts from confrontation to coexistence. There is no longer a sense of needing to extract something from price. Instead, there is a willingness to engage only when alignment exists. This shift alone explains why many Japanese traders remain active for decades while others burn out within years. Most traders believe longevity comes from profitability. In reality, profitability comes from longevity. The Japanese approach places survival above performance. This does not mean settling for mediocrity. It means recognizing that consistency is fragile and must be protected. Every daily habit, from emotional check-ins to deliberate non-action, exists to reduce psychological wear and tear. A trader who is emotionally intact can continue learning. A trader who is emotionally exhausted cannot. This is why Japanese traders are rarely impressed by short-term results. A strong month means little. A calm year means everything. Over time, the daily habit of neutrality reshapes perception. Market volatility no longer triggers excitement or fear. It becomes texture. Noise fades. Structure becomes clearer. The trader stops reacting to every movement and starts recognizing patterns that only reveal themselves through sustained observation. This level of familiarity cannot be rushed. It requires showing up consistently without demanding immediate rewards. Most traders abandon the process before this familiarity has time to develop. Another long-term effect of these habits is emotional compression. Highs and lows become less extreme. Winning does not inflate confidence. Losing does not crush it. This emotional narrowing creates stability, which in turn supports disciplined execution. Stability is the real edge. Not easier, but quieter. The internal dialogue softens. Japanese traders often describe trading as something that becomes quieter over time. The urge to interfere diminishes. Decisions feel less dramatic. This quietness is often mistaken for boredom by newer traders. In reality, it is focus refined. Most traders seek excitement. Japanese traders seek clarity. Clarity also changes how mistakes are processed. Errors are not dramatized. They are acknowledged and corrected without emotional residue. This prevents the accumulation of frustration that leads many traders to revenge trade or abandon their rules. By maintaining a consistent routine, regardless of outcome, identity remains stable. The trader is not a winner or loser. They are a practitioner. This identity shift removes performance anxiety and allows probability to play out over time. One of the reasons most traders ignore these habits is that they do not feel productive in the short term. There is no dopamine rush, no sense of chasing something. The rewards are delayed and subtle. They show up as fewer mistakes, clearer decisions, and emotional steadiness. Modern trading culture undervalues these qualities. It rewards speed, confidence, and boldness. Japanese trading culture rewards patience, restraint, and humility. This cultural difference explains why many traders who adopt Japanese principles initially feel uncomfortable. They feel slow. They feel passive. They feel as though they are missing opportunities. Over time, they realize they are missing fewer mistakes. This realization marks the turning point. The daily discipline of emotional awareness, deliberate pacing, structured routine, and quiet reflection creates a trader who is resilient. Not invincible, but resilient. Drawdowns are endured without panic. Winning streaks are handled without recklessness. Balance is maintained. Eventually, profitability appears almost as an afterthought, not because effort was reduced, but because friction was removed. Fewer emotional leaks, fewer impulsive decisions, fewer self-inflicted wounds. Most traders never reach this stage because it requires letting go of control. It requires trusting a process that doesn't offer immediate validation. It requires humility. Japanese traders embrace this humility early. They accept that the market is larger, faster, and more complex than any individual. Instead of fighting it, they align with it. This alignment is not passive. It is disciplined. It is intentional. It is practiced daily. By the time success arrives, it feels ordinary. There is no dramatic moment, no final victory, just a sense of continuity. The trader is still there, still practicing, still refining. This is what most traders ignore. They search for answers in systems and setups, while the real difference is built quietly, daily, in how one prepares, observes, reacts, and rests. The Japanese trader's edge is not hidden. It is simply unglamorous. And in a field obsessed with speed and spectacle, the unglamorous is easy to overlook. But it is also what lasts.